Have you ever looked at a company that's, making serious waves, but you just get this feeling there's something much deeper going on beneath the surface?
Mm-hmm.
A name generating a ton of buzz, lots of strong opinions, maybe even conflicting ones.
Happens all the time in fintech.
Exactly. Well, today, we're going to really dig into one of those. Webull Corporation.
Okay.
They're a fintech disruptor, and honestly, they seem to be at a really pivotal moment, some incredible financial shifts recently.
Definitely see Mac.
Carving out their own niche in a super competitive space. And it's this mix, right? Big risks, but maybe some compelling rewards, too, for anyone trying to figure them out.
Yeah.
So our mission today is basically to unpack all that. Okay, let's get into it. Is Webull really just a poor man's hood, Robinhood, that is like some people call it? Or is there, a much more interesting story here?
It's definitely not simple, not clear-cut. And honestly, that complexity is what makes it so interesting to look at. I mean, their public debut, that was via SPAC merger, right? Which kind of set the stage for volatility from the get-go.
Mm-hmm. SPACs often do.
Exactly. And we've seen pretty extreme stock swings ever since. So yeah, you really need to peel back the layers, operations, strategy, and these big external pressures hitting the valuation.
And wow, what a pivot it's been operationally. If we look at their latest numbers, Q1 2025, they came out May 22nd. It's just a dramatic shift from a year ago.
A huge shift.
Revenue surged, 32% year over year, hit $117.4 million.
Yeah, impressive growth.
And the driver was mostly trading-related revenue, up 52%. But the thing that really grabs you is the bottom line, a net income of $12.9 million.
Mm-hmm.
That's a massive $25.5 million swing from a $12.6 million loss in Q1 2024. So the big question is, how? How did they pull off such a fast, significant turnaround? Is it just clever accounting or something more fundamental going on?
Yeah, it's a fair question. But this looks like more than just a good quarter. It seems like a pretty textbook case of operating leverage really kicking in.
Operating leverage. Okay.
Yeah. What's fascinating, right, is that while revenue shot up, their total operating expenses actually went down by 2%.
Went down while revenue went up.
Exactly.
Yeah.
Which tells you the platform is now scaled. It's built to generate way more profit from each new dollar coming in. Think of it like their fixed costs are mostly covered now.
Gotcha.
So that extra revenue, it flows much more directly to the bottom line. If you compare that to, say, their full year 2024, revenue was basically flat, $390 million or so, and they had a net loss of about $23 million.
Right, I remember that.
And, that year, 2024, you could probably call it a strategic investment year for them.
Okay, what does that mean in practice?
Well, imagine pouring a lot of money into building out global infrastructure, right? Expanding your reach. They had those front-loaded costs for the SPAC merger.
Ah, the legal and financial stuff.
Yeah, all that complex upfront work. And they were expanding aggressively around the world. Southeast Asia, Latin America, getting footholds in new markets.
So big spending year.
Big spending, one-time pressures, high upfront costs. That explains the losses back then. But now, with a lot of that foundational cost behind them, they're reaping the benefits of that scale. And that's why Q1 2025 looks so different.
Makes sense.
And it definitely helps. They have a pretty healthy balance sheet, too. Nearly $300 million in cash, not much traditional debt. Gives them a good cushion.
So, okay, if they're showing that kind of financial strength, that efficiency, it really makes you question that poor man's hood label, doesn't it?
It does.
Our source material basically throws that idea out, calling Webull a more sophisticated prosumer platform aimed at immediate active traders.
Yeah, that feels more accurate.
It seems like Robinhood is maybe more for the absolute beginner, keeps it super simple.
Right.
Whereas Webull kind of scoops up users who graduate from those simpler platforms like a natural next step for traders.
Absolutely. Their market position is pretty distinct. Its strengths really appeal to more experienced, more engaged traders.
Like what specifically?
Well, truly commission-free trading, including no options, contract fees, that's a big one, and advanced tools,
Wow.
things that give users deeper insights.
Okay.
Like they offer over 60 charting indicators. So you can really dive deep into technical analysis if that's your thing.
Yeah.
The interface is super customizable. You can build your own dashboard, essentially.
Right.
And they have a really robust paper trading feature. Lets you test out complex strategies without risking real money. It's clearly built for people who want more data, more control.
But it's not perfect, right? I remember reading about some issues.
Oh, definitely not perfect.
Yeah.
It's important to acknowledge the reported weaknesses, too. Some users have mentioned, slow customer service sometimes.
Frustrating.
And yeah, app glitches or slow fund transfers can be a real headache, especially if you're an active trader in a fast market.
Yeah, that could be a deal breaker.
It could. Plus, they still lack certain asset classes like traditional mutual funds or a wide range of bonds, so that might limit options for, say, long-term or more diversified investors. And when you talk about that valuation gap between them and Robinhood, you have to remember Robinhood's just got a much bigger asset base, often more affluent users, and crucially,
The U.S.
the U.S.-based structure. That gives them a big advantage in how the market perceives them, especially with all the geopolitical stuff swirling around.
Yes, the geopolitical stuff. That seems like the elephant in the room, doesn't it? The single biggest thing weighing on Webull's stock, the China risk.
Absolutely. It's undeniable.
So Webull is owned by Hunan Fumi Information Technology. That's a Chinese company.
Correct.
And a big chunk of their tech team is actually in China.
That's right.
Which, while predictably, has drawn some intense scrutiny from U.S. lawmakers. We saw the House Select Committee on the CCP raise formal concerns back in December 24.
That made headlines.
Then came calls for an SEC investigation, even talk of delisting in April 25. I mean, I remember the stock price dropping sharply after those reports. It wasn't just noise. It felt serious.
It was serious. Formal congressional inquiries about data security, potential access by the Chinese government. Those are heavy concerns.
And then Jim Cramer just came out with that blunt, absolutely no recommendation, just a gut reaction to that headline risk, it seemed.
Yeah, it shows just how sensitive the market is, specifically to this issue.
So how do they even begin to counter that kind of credibility discount, as you called it?
Well, they are actively trying. And what's really interesting is their strategic appointment of Walter Bishop to the board. That was June 8th, 2025.
Walter Bishop. Who is he?
He's a veteran of U.S. financial regulation and compliance, held senior roles at places like Deutsche Bank, Barclays U.S., KPMG. He's now on Webull's audit and governance committees.
Okay, so bringing in some serious U.S. regulatory experience.
Exactly. It's a very deliberate, very significant signal to regulators, to investors, basically saying, look, we understand the concerns. We're building credibility within the U.S. system.
Trying to counter those fears of foreign influence?
Precisely. Aiming to try and narrow that valuation gap caused by the risk. But, this raises a really important question for you, the listener.
Yeah.
Can strategic moves like this, bringing on a respected board member, can that truly overcome such a significant, deeply rooted geopolitical risk?
That really is the multi-million-dollar question, isn't it? It's like,
yes,
you do everything right operationally, but these huge external forces are pushing against you.
It's a tough spot.
But okay, looking beyond those risks for a second, they do have a pretty aggressive growth plan, right? Lots of new stuff coming.
They do.
So what does that mean for their future, especially with all these new features and partnerships they seem to be rolling out?
Yeah, their product and partnership pipeline is actually quite significant. And it seems strategically aimed at growing the user base and, crucially, getting more users to fund their accounts.
Right, the monetization.
Exactly.
Yeah.
So first, they're making a big re-entry into crypto. Partnering with Coinbase, launched in Brazil in June 25, and a U.S. rollout is expected over the coming months. That tackles a big friction point, right? Users wanted crypto.
Definitely.
Then they launched these hourly prediction markets, Bitcoin, Ethereum, for U.S. users. That was through Kalshi in June 25. It's a novel way to get users engaged, betting on short-term moves.
Interesting, like micro trading.
Sort of, yeah. Very short-term engagement. And beyond crypto, they're building out other key integrations.
Like what?
Partnering with TradingView for advanced charting. That's a huge win for active traders. TradingView is very popular.
Yeah.
Working with Visa to streamline fund transfers, directly addressing those complaints about slowness.
Good.
And importantly, integrating BlackRock model portfolios via Webull advisors. That's clearly a move to attract more long-term investors looking for managed options on the platform.
So hitting multiple angles there, crypto, active trading pools, easier funding, longer-term investing options.
Right. Covering a lot of bases.
And it's not just the product stuff, is it? Market sentiment, technicals. They always play a role with stocks like this.
Oh, absolutely.
I mean, the ticker itself, BULS, it's simple, memorable, instant meme stock potential, maybe. Could grab that retail interest.
It certainly could. That kind of branding matters in today's market.
And I know there's been talk among traders about a potential short squeeze, given how many people are betting against it.
Yeah, that's definitely part of the conversation. High short interest plus positive news can lead to rapid moves. Traders are absolutely watching key technical levels.
Right. Plus you have marketing like their deal with the Tampa Bay Rays baseball team and maybe broader tailwinds if interest rates eventually come down.
All those things contribute to the overall sentiment picture, yeah. Macro factors, marketing visibility, it all feeds in.
And how does this all tie back to user growth? You mentioned that gap earlier.
Right, the monetization gap, it's huge. They have, 24.1 million registered users globally?
Wow, okay.
But only 4.7 million of those are actually funded accounts, people who have put money in.
So a massive pool of potential customers already signed up.
Exactly. That gap represents their single biggest organic growth opportunity. All these new products, the partnerships, the improved experience, they're aimed squarely at converting those registered users into active funded customers.
Getting them off the sidelines.
Precisely. And their success in closing that gap, moving people from just signing up to actually trading and depositing funds, that will be a really crucial metric for you as an investor to watch.
Okay, so let's try and pull this all together. We've got the operational turnaround, the prosumer positioning, these growth catalysts, but also these really significant risks. It really feels like a classic high-risk, high-reward situation.
It absolutely does. You can build strong arguments on both sides.
Okay, lay out the bull case for us.
All right, the bull case. You start with that clear Q1 25 fundamental turnaround, profitability, operating leverage kicking in. That's real operational progress. Then you have that strong pipeline of catalysts we just discussed, crypto reentry, key partnerships, clear growth drivers. The argument is that the current low valuation is mostly due to things that might be temporary, the geopolitical noise, the post-SPAC hangover, implying there's significant upside if or when those pressures ease.
Okay.
And of course, for shorter-term folks, there's always that potential for sharp gains from a short squeeze or just bursts of retail interest.
Got it. Now the flip side, the bear case.
The bear case is equally compelling, maybe more so for cautious investors. It starts and pretty much ends with that geopolitical risk.
The China connection.
Yeah. Is it truly insurmountable? Could U.S. regulatory action or even, worst case, delisting just permanently cap the valuation no matter how well they execute operationally? That's the core fear.
A permanent discount.
Potentially. Then there's the intense competition.
Right.
Robinhood is huge, way better capitalized, dominates the U.S. market. That's a tough fight.
True.
There's also execution risk. Webull has ambitious global plans, lots of product rollouts. Can they actually deliver on all of it effectively?
Always a question with rapid growth.
And finally, just general concerns about the stock being speculative, maybe prone to pump and dump dynamics, adds another layer of caution.
It's fascinating, isn't it? Even the so-called smart money seems split. You've got long-term believers and short-term traders all placing their bets.
Absolutely divided, which tells you just how complex this picture is.
So, summarizing.
Yeah, ultimately, Webull presents this really compelling operational story, right? Strong signs of a turnaround, a clear growth path, but it's just undeniably overshadowed by these significant external risks, especially the geopolitics. This whole situation, it really crystallizes that complex dance between a company's core business performance and these much broader global forces. It's like a high-stakes game where geopolitics can sometimes checkmate even the best financial strategy.
And that really brings it back to you, the listener, doesn't it, for your own investment decisions? When you look at a company like Webull, how do you weigh that? A clear fundamental turnaround, a good growth story, versus these unpredictable, hard-to-quantify geopolitical risks and just the wild tides of market speculation?
It's the crucial question.
It's definitely a powerful reminder, I think, that these external factors can just dramatically sideswipe even the most promising operational stories. Understanding that whole dynamic feels pretty key to navigating the markets today.